the $1 million Balaji Bitcoin bet that this is the end of days?
I think it's not the end of days, but I think you're conflating a bunch of things together. So look, MMT
Yes, I am. Yes.
was, in hindsight, idiotic. In the moment, it never quite made sense, but in hindsight, it's clearly idiotic. And I think that we can properly dispense with that. But the reason that we print so much money is sort of what Freeberg says, which is that we just want a well-functioning society. And the simplest and shortest way to do that is to make sure that there aren't any winners and losers anymore. And the most effective way to do that in the markets is with money. Print a bunch of money and there are no more winners and losers. And so everybody can kind of win. Some people may win more, but nobody really ever loses. So I think that's the MO that we're operating under. The thing is, I don't think
something unhealthy to that, Chamath. You're sort of alluding to no losers.
That's a more philosophical and a commentary on capitalism and a bunch of other things. And you're right. I don't think it makes sense. I do think you need winners and losers to really make society function well. But the other part of it is like, does it reinforce or does it decay US dollar hegemony? And I think it actually reinforces it. And the reason is just very practically speaking, when you look at how dependent other people, other countries are on the US dollar, in times of stress, they actually become more dependent. And that has a lot to do with their borrowing patterns, the amount of dollars central banks need outside the United States. And so what did you see in a moment of stress? Actually, the Fed opened up swap lines to all the central banks that they work with, their most important operating partners, so Europe, Canada, Japan, etc., Switzerland. And they moved the liquidity window from weekly to daily, and they pounded the swap lines. So I don't know. I think that most people that kind of like, it's like a boy crying wolf. Maybe at some point somebody will be right, but you're going to lose so much money trying to take a point of view around this topic that it's more practical to just look at dollar flows. And dollar flows go up in moments of stress, not go down. And they go up in a distributed manner across the monetary plumbing of the world. That's the latter. I mean, I think that there was a rumor going around, I don't know how true it is, that FTX was days away from getting a critical approval by the SEC to actually even further legitimize their US exchange before they went out of business. So I think Gensler had to pivot very hard from, at a minimum, being very pro FTX, and there's all kinds of stories about his interrelatedness with Sam and his family, to very anti-bit or anti-crypto in general. That's clearly happened. But look, I think that this is like a lot of tin hatting, which I don't think is very productive. If you look at the total number of non-zero Bitcoin wallet addresses in the world, and let's be extremely generous and say it's 100 million, there's still 7 billion people in the world. And so I just think everybody that tries to speak about the fragility of the US and worldwide banking system is right. And that part I think is quite lucid and unemotional. But every time they try to connect it to Bitcoin, they sound like a crazy person because they're just talking their book.
Bitcoin, often referred to as the undisputed king of cryptocurrencies and the cornerstone of digital finance, finds itself ensnared in a turbulent whirlwind as its value plunges precariously below the once unfathomable $93,000 mark. This dramatic decline is occurring amidst a broader wave of investor caution regarding risk-prone assets, a sentiment that has been reverberating across all financial landscapes in the wake of the Federal Reserve's latest proclamations. While Bitcoin is far from the sole player entangled in this volatile scene, it undoubtedly stands as a crucial linchpin in the unfolding financial drama. Prominent market entities such as Tesla and Nvidia are simultaneously grappling with post-election fluctuations as well. Consequently, Bitcoin's recent fall has sparked considerable interest, raising eyebrows and ushering a wave of questions. What implications does this hold for the crypto's fervent followers? And could this moment of financial downturn transform into an unforeseen opportunity for those daring enough to seize it? Welcome back, everyone, to Investocracy Crypto.
And that is exactly the case, by the way, with this kid, Nick Carter. Yeah.
And the best example to demonstrate this is in all of this chaos. If Bitcoin or crypto assets in general were truly a legitimate off-ramp and salvation from US dollar hegemony and all of this stuff, why isn't Bitcoin at least at 35,000 a coin right now? It's barely above 28,000. It really hasn't moved that much. And I think the real answer is that most people in Bitcoin are not trying to hedge their existing fiat currency exposure. They're just picking off people in retail. And they're just day trading this thing. I mean, how else do you explain an asset that is not absolutely ripped in the face of all of this terrible news about the financial system? And I think the answer is because it's still a cul-de-sac of users. It's not broadly available, not broadly adoptable, not broadly used. I still believe that it's valuable. I was the earliest proponent of Bitcoin, 2011.
Yeah.
2012. So I believe that there's a place for it in one's portfolio, but I just think connecting these dots misses the point. And I think the point is much, much bigger than a crypto off-ramp. The point is that we have a lot of systemic shocks that are building up in the system. We have broken a ton of the systems that cause the financial infrastructure and the world to work properly. And we are just starting to uncover how they're broken. So I think we need to focus our energy on that and dial down a little bit of the Bitcoin maxi stuff because it distracts from a really important set of topics that are more inclusive and actually touch 7 billion people. My point is put this in the who cares bucket and get back to the facts. Friedberg mentioned it. We have a debt ceiling problem that's in the offing. Sachs mentioned it. We have a commercial real estate crisis. We just talked about the fact that he didn't raise rates enough, nor did he cut enough. So we're in this weird middle path that Jay Powell we're talking about. So those are the facts on the ground that I think we should focus on because those will have implications to how people can borrow, start businesses, capitalize risk assets. That's a big problem.
The captivating saga surrounding Bitcoin's notorious volatility is akin to an enthralling page-turner, capturing the imaginations and analyses of the investing world. Not so long ago, Bitcoin climbed to a breathtaking, awe-inducing all-time high beyond $108,000, a figure that captured global attention with its stark magnitude. However, this explosive momentum was not destined to last, as Bitcoin's value subsequently plummeted with unanticipated swiftness, sending ripples of anxiety throughout investor circles. A pivotal element in this ongoing narrative seems to revolve around the Federal Reserve's maneuvers and forecasts. Their indication of fewer interest rate cuts in the coming year sent seismic shockwaves through equity markets, inevitably making their presence felt within the realm of cryptocurrencies. Envision Bitcoin as the hair-raising roller coaster in the financial amusement park, where every upward or downward tick resembles a thrilling twist or a heart-stopping drop. It hardly comes as a surprise that Bitcoin's substantial leap, followed by its dramatic descent, unfolds in the midst of significant financial milestones. Former President Trump's election victory, encapsulating a pro-crypto stance, initially propelled Bitcoin to unprecedented heights. It's a roller coaster ride devoid of seatbelts, leaving investors clinging on for the thrilling ride.
Yeah, good afternoon. I think you have to have a positive medium to long-term view in Bitcoin to be positive on MicroStrategy. Kind of going back to Michael Saylor's analogy of Manhattan real estate, there's not much more of it that's ever going to be created. And so there is a scarcity value proposition there. In the case of MicroStrategy, they're just going to continue on this path of buying more Bitcoin. And, importantly, what you see in this strategy is MicroStrategy's ability to create accretion in Bitcoin held per share. It doesn't necessarily show up in their financial statements, in their earnings numbers, or the like. But every day, if you are an owner of a share of MicroStrategy, that share represents an increasing amount of Bitcoin on a per Bitcoin basis. And so that's what investors are really looking at, and that's why they've rewarded the company so much in the last couple of years here.
Amidst the complex web of market interdependencies, major stocks are feeling the pressure, with Tesla and Nvidia highlighted as notable examples. Tesla's post-election slide mirrors broader market dynamics, while Nvidia's parallel decline underscores the ripple effects engendered by shifting market sentiment. Despite the intensity of this high-stakes drama, humor often finds a moment to relieve the tension. One might jest about Bitcoin's ever-fluctuating value with quips like, "Why make decisions like an adult when you can invest like a millennial with Bitcoin?" Yet, while humor abounds, significant and important trends are visible just beneath the surface. Bitcoin has experienced a meteoric rise, more than doubling its value in the span of the current year. Key drivers such as the advent of spot exchange-traded funds and prevailing political climates have played prominent roles in shaping this narrative. However, alongside soaring gains comes heightened scrutiny and cautiousness, a tension that is amplified as market patterns undergo sudden shifts. As Bitcoin drags digital peers like Ether and XRP into its downward spiral, the crypto sector finds itself at a critical juncture, a stark reminder of the intrinsic potential for volatility and rapid shifts that digital assets inherently possess. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So Joseph, what do you think of the asset then? I mean, at the end of the day, we all know what this is a call on. And I'm not questioning your ability to make a call on Bitcoin. I'm just kind of curious what your call on Bitcoin is, because ultimately that's really what this comes down to. And I would think this does feel different than a miner going out there and securing physical assets in the industry that they're involved in. But talk on Bitcoin, or who's the next Bitcoin, or where do you go with this trade, or are you just buying Bitcoin forever?
Well, you may be just buying Bitcoin forever. Taking a word out of Michael Saylor's pitch book, Bitcoin is the exit strategy. If you look at Bitcoin over the last few years, it's come a long way. It's seeing broader institutional adoption. Under a second Trump administration, we're expecting a much kinder regulatory backdrop. We've been dealing with a very menacing regulatory backdrop here over the last couple of years. If we get a broad regulatory framework in place, digital assets just continue to make their way more into the mainstream. There will be more buyers of it. You could see other players do or mimic a MicroStrategy type of strategy, or you could just see large tech companies, the Magnificent Seven, just allocating 1 or 2% of their balance sheet to Bitcoin. So it does feel like, nothing's perfect and not every asset class is for everybody, but the backdrop around the fundamentals of Bitcoin have really only been improving here over the last year and a half.
As the metaphorical curtain descends on this chapter of Bitcoin's epic odyssey, one cannot help but ponder, could Bitcoin's decline herald a new dawn of opportunity? There exists an enduring potential for growth, securely built upon the firm foundations of past performance and the blueprint of ongoing innovation and market adaptation. At present, Bitcoin stands at a pivotal crossroads, its value both confronted with challenges yet poised at the brink of potential resurgence. Predictive financial models suggest a favorable trajectory over the long haul, as newer investors alongside seasoned veterans weigh the potential benefits of diving into, or choosing to stay grounded amidst, the burgeoning field of digital currencies. The present turbulence in the market may well serve as a springboard, setting the stage for the next unparalleled wave of digital asset appreciation. As with any investment endeavor, exercising due diligence and maintaining a watchful eye are indispensable. So, what are your thoughts? Is this turbulent storm the ideal prospect for those seeking to invest? Or is it wiser to watch out for the tempest to pass, awaiting more tranquil trading waters? Market explorers and crypto enthusiasts, your insights and strategies are the whispers that will eventually echo through the corridors of finance. Share your perspectives and join the vibrant conversation shaping the transformative future of crypto investment.